Boeing was downgraded by Wells Fargo, giving it the lowest price target on the street. And Airbus, its only rival, is having some problems as well. Bloomberg's Abigail Doolittle has the details on these two big plane makers. Abigail?
Yeah, not surprisingly, both of these shares are down on these respective pieces of news. And I would say that Airbus may be down a little bit in sympathy with Boeing on the broader downgrade from Wells Fargo on Boeing relative to the company's free cash flow position and the possibility that it may peak in 2027. Analyst Matthew Aker seeing the cash opportunity out the door. Airbus, though, the news that you're talking about there, Cathay Pacific Airlines, they have found many issues. I think a third of their planes that they would fly with the fuel line. So they have actually grounded multiple flights. Those shares down 1%, Boeing down 4.1%. For Boeing, the problems are so many that this is just the worst day in a couple of weeks. It's not even that big of a drop. Let's take a look at that free cash flow that I was talking about, though, because for Airbus, it's not an issue. If we take a look at free cash flow in white for Airbus and in blue here for Boeing, Boeing has essentially burned through about $7 billion in free cash flow this year. Our Airbus, on the other hand, is expanding. Not surprisingly, given this gap, in the numbers and all of the headline risk, the perception risk with Boeing. Well, Boeing is really suffering from a performance standpoint. If we compare it to both of the S&P 500 and an airline production index, we are going to see a bit of a decline here, some underperformance for the shares of Boeing, which since its 2019 peak, Shanali, down more than 60%.